Well, what a week it's been for Opendoor. The stock closed out Friday with yet another strong performance, finishing up over 5% to close at $2.54. That caps off a week of remarkable volatility, resilience, and undeniable bullish sentiment that has seen the stock rise sharply from its earlier lows, firmly establishing itself above the $2 mark and now appearing to build a new foundation of support in the $2.40 to $2.60 range. The price action on Friday wasn't explosive, but it was telling. The stock maintained green territory throughout the day, and that sort of steady upward pressure shows that there's still belief in this rally. There's also a psychological boost in finishing the week strong, something that retail traders and even institutional observers are paying close attention to heading into what could be a pivotal week. The ability of the stock to hold firm gains without giving back too much reflects increasing investor confidence. Now, one of the big storylines we've been following is, of course, the upcoming reverse stock split vote. And here's the thing, it's looking more and more like this vote might end up being a non-event in terms of its direct impact. The stock has returned to Nasdaq compliant levels, meaning the pressure that initially prompted this proposal has eased. While the board is still seeking the authority to enact a reverse split if necessary, it has already signaled that it would only do so under compelling circumstances. That's important. It shows restraint and awareness of the investor sentiment fueling this rally. The board's cautious posture around the reverse split signals that they may be aligning themselves more closely with retail interests than expected. Retail traders especially are feeling energized. Across Reddit, Twitter, StockTwits, you name it, Opendoor, or Dollar Open, has become one of the most discussed tickers of the week. And this isn't just noise. The chatter has real momentum behind it. Traders are sharing DD, technical chart analysis, and rallying behind the idea that this stock could be the next big mover in the meme rally 2.0 landscape. Even more impressively, the stock managed a strong aftermarket session on Thursday, tacking on another 11 cents after hours. That kind of follow-through after the bell reflects a level of conviction we haven't seen in a long time. It's a sign that some traders may be viewing the stock as undervalued or positioning ahead of the next catalyst. But let's zoom out a bit. Beyond the technicals and the sentiment, there's also a growing conversation around Opendoor's business fundamentals. Yes, the company has faced pressure over the past couple of years, particularly with the cooling housing market and tightening economic conditions. But there are early signs of a recovery beginning to show in the housing sector. New listings are picking up slightly in some regions, and buyer interest is returning as rate volatility decreases. Mortgage rates have started to stabilize, and with forecasts increasingly suggesting that rates could come down later in the year or into early 2025, that could be a major tailwind for a business like Opendoor. If homes start to move more freely and buyer confidence returns, Opendoor's model suddenly looks much more scalable and profitable again. Lower rates also tend to spark greater activity from both buyers and sellers, providing the liquidity that Opendoor's iBuying model depends on. In fact, this ties into something that's been getting more attention lately, an ambitious price target of $82 per share that has floated around as part of earlier valuation models. Now, we're not saying the stock is going to hit that next week, or even next month, but it speaks to the long-term potential some investors believe exists here. If this company can capture even a fraction of the real estate transaction market it's aiming for, that target isn't as outlandish as it might seem. Especially if housing market dynamics continue to improve and Opendoor can show improved earnings performance. The mere fact that this target exists as part of historical analysis is enough to re-energize some long-term bulls. And speaking of earnings, that's the real catalyst that investors should be watching now. While the reverse split vote on Monday will grab headlines, it's the upcoming earnings in August that could provide the spark for the next major leg of this rally. If Opendoor can show narrowing losses, improved margins, or even just solid revenue growth, that could turn speculative excitement into something far more sustainable. This earnings report could serve as a referendum on the company's rebound narrative. We're entering a new phase. The rally so far has been fueled largely by momentum and sentiment, but now we're approaching the point where fundamentals need to step in and support the valuation. And based on what we're seeing in the broader housing market and the company's stabilization at higher price levels, there's growing confidence that Opendoor might be able to deliver. If the company can demonstrate progress in inventory turnover, margin control, and cost management, it could start attracting more serious institutional interest. So, as we wrap up the week and prepare for the next chapter in this story, keep your eyes on the big picture. The vote is coming, but the groundwork for a much larger move may already be in place. With a recovering housing market, bullish long-term targets, and a crucial earnings report on the horizon, Opendoor is becoming a stock you simply can't ignore. All signs point to this stock being on the verge of something much bigger. Buckle up, it's going to be an exciting week ahead.